Now, in order to get the stock market to really start crashing in a major way, we're going to have to start seeing unemployment start flying, okay? And, recently we hit 3.8% as a past year for unemployment rate, right? And if all of a sudden we go 4%, 4.5%, 5% in 2024, yeah, we're in for it then. Because here's the problem. And you might say, well, isn't that kind of a good news? Because that would mean all this wage pressure comes down a little bit of good news, but it's a lot more bad news. Because the problem is when the unemployment rate starts slipping and the dominoes start falling that way, you don't know when it's going to stop. Is it going to stop at a 4.5% unemployment rate? Is it going to stop at 5%, 7%, 9%, 10%, 12%, 15%? You don't know. That was the scariest part of 08, 09, was when the unemployment rate started to slip. And then it started to slip fast. And next thing you know, 4%, 5%, 6%, 7%, 8%. And it peaked at just over 9% on unemployment rate. And that's if you believe the government number. Some people don't believe the government number, so they actually believe it was a lot more than 9%. I'm not going to get into that debate or argument. But nonetheless, when you get into that scenario, it's very, very scary. And then we bottomed out the market, obviously, around March of 2009, because people felt like the worst was behind us in terms of the unemployment picture. Plus, you had the Fed starting to back things. So it was between those two that kind of bottomed us out. And then we slowly started to come back over the next 2 to 3 years. But that's a process to go through. And it's a scary, scary thing to go through, man. As somebody that was in the market in 08, 09, and I was just a little newbie beginner in that, like, I watched a lot of people, with their portfolios going down and stocks going down. And I remember watching CNBC and the panic that would come from these folks on a daily basis, seeing stocks down big and the unemployment rate keep climbing and you not knowing where the end is. That's the scariest part of that, right? And in terms of unemployment getting in a better place, usually it's kind of like walking stairs. But when it starts going down, and especially if you have a credit crunch or something happened in the banking system, it's like taking the elevator down. It happens quick, man. Okay, so you get a stair step up over time when it comes to bringing unemployment down. But when it gets ugly, it's a straight elevator drop. You saw that obviously in 2020 with the shutdowns. You saw that in 08, 09. It happens quick and it gets pretty ugly fast. And so that's a huge thing to just keep an eye on. That if we see this, we're going to be going down substantially. And I mean substantially on the market, right? Which, by the way, if you want a glimmer of good news before I get into kind of how I'm approaching this market moving forward and kind of how I'm thinking, hey, I don't know if it'd be a worse thing to have unemployment go up a little bit. Like, this whole situation is ridiculous, man. Henderson, I love Henderson, okay? I got a property in Henderson. CCSD, Clark County School District, concerned after Henderson School cancels classes due to teacher and staff shortage. They have to what country are we living in? You don't even have enough teachers and staff to run a school? Like what are we talking about here? What are we talking about? It's embarrassing, absolutely embarrassing. But that's a phenomenon we're going through in the economy where, if you want to know some good things about if unemployment went up is, man, maybe people will start to get some of these jobs again. And I think maybe schools should maybe pay teachers a little better. That might attract a little more folks because, teachers have been underpaid for 10 plus years now. And with how much inflation has gone up, I'm telling you, man, this is embarrassing, man. And how are we gonna have the next generation if we can't even have class? Like, what is going on, man? What is going on? Palantir. So Palantir, one of the most controversial stocks in the stock market nonetheless. Yeah, definitely one of the most controversial stocks. People have strong opinions on Palantir. Bullish, bearish. It seems like, man, I don't know. It's just Palantir is one of those stocks that gets the people going. And in regards to Palantir, it's certainly doing us very well so far. We're up 73% on this one, up about $36,000. It makes up about 5% of the portfolio in general, right? Now, you know what's interesting about Palantir is we're dealing with a company that has obviously a great relationship with government, right? We're dealing with a company that has massive expansion into commercial. We're dealing with a company that has huge potential in the AI space. I've talked about Palantir for the last several years in terms of being the perfect company that's at the cross sections of data and artificial intelligence, right? And helping your company, government, whatever, make much better decisions than if you didn't have Palantir. And whatever you spend on Palantir, it's going to yield you much more than that. So if you spend $25 million a year on Palantir, it should yield you way more than $25 million in cost savings or helping generate better business decisions for more revenue opportunities, whatever it is, okay? So when it comes to Palantir, it's such a controversial stock because some would say it's very overvalued. Some say it's, very undervalued, okay? And you're talking about a company that's trading at about 66 times this year's 2023 numbers, right? Which looks expensive. And then you add on top of it the fact that the stock price has gone up over 100% this year, and people say, oh, Palantir is overvalued. What I'm here to tell you today is Palantir is not overvalued, actually. We're talking about a company that's just hitting profitability. They're at infant stage. This is inning 1 of profitability for Palantir. The profitability this company should produce 3 years out, 5 years out, 7 years out is going to make today's numbers look like a complete joke. Like, oh, that was so cute when we were at infant stage of profitability, right? The company's just learning how to walk when it comes to profitability, okay? We still got to run and sprint ahead. And so when it comes to Palantir, it looks expensive when you first view it, and then you start to dig in a little deeper and you start to run some projections on what net income can be several years out, and you realize it's not nearly as expensive as it might seem. And then you add on top of that one of the best balance sheets, certainly, in all of the world, right? And then the AI opportunities there. So, yeah, Palantir. Now, am I going to be buying Palantir stock? And the answer to that is potentially. It's not like a for sure buy for me because I already have a pretty good position size in it. 85K is pretty appropriate. I mean, I can see myself maybe getting up to $100,000 in this portfolio. Am I planning on selling Palantir? Absolutely not. I mean, when you got a company in this space that has the opportunity this company has over the next, 5+ years, if not 10+ years, yeah, I'm not interested in selling this one anytime soon. So Palantir is just a long-term hold for me. If you're betting on just the indexes in general, yes, you're not being paid a very attractive risk-reward profile right now because you're basically kind of betting on the soft landing happening, right? And so, but there's a lot of stocks out there that are just heavily beaten down that I think you are getting that risk-reward. The indexes in general, no. Many stocks a little further down the list outside of the most important ones, yes, you are getting paid. But he brings up a great point that usually if you're going to a soft landing or hard landing, you're usually in a situation where things are getting worse, but you're not really sure like how bad, much worse, how much are things going to decelerate. But there was an interesting phenomenon that went into this particular situation that we haven't had going into past recessions. One was you had going from a closed down economy into a full go open economy again that took, several years to kind of ramp that back up, right? The second component that you don't usually have right before a recession is just an insanity amount of stimulus pump and money pumped into the system, right? Which is obviously what we had certainly in 2020 and into 2021 and even into the beginning of 2022 and with exceptionally low rates. So that's where things get a lot more confusing. If you didn't have that, I think you could have already had this landing scenario. But then again, if you had that, right? Or let's say you didn't have that, you didn't have all the stimulus pump, you didn't have the rates at zero, blah, blah, blah. Well, you wouldn't have ever had that insane inflation either. We wouldn't have. So you can always look at things differently. And so I think that's just a factor that we all got to keep in the back of our mind. If you were betting on, a great financial crisis situation, you didn't have the sort of money pumped into the system right before that we had. Okay. And so these are things to definitely consider out there. You didn't have everybody locked in at 2% and 3% interest rates on their mortgages, right? These are things to consider.